Welcome to another S&P 500 analysis. Today is February 2nd, 2022. The upside scenario we put forth in the last video for the S&P 500 continues to play out. The question is, will this rally continue or is this a trap for the both? In this S&P 500 analysis video, we will review the market sentiment, its internals, and the price action of the S&P 500 along with the other major market indexes to see what they are telling us. Stay tuned. Looking at this intraday chart of the S&P 500, this is a 3-minute chart here. As you can see on the first 3 days, the S&P 500 is pretty much grinding up, right? Slowly grinding up back to the 4600 area. But on Monday, we noticed that the new high, new low was negative. In other words, there were more new 52-week low than new 52-week high in the New York Stock Exchange. Then on Tuesday and today, Wednesday, it turned positive, although it's just slightly. The other thing to note is the up-down volume ratio here. On Monday, the up-down volume ratio was actually pretty strong. So was yesterday, and then today we see that it turned negative, but the S&P 500 was positive throughout most of the day, except just a brief moment here that it went negative for a brief period. But as you can see, throughout the day, it was just grinding up, or in other words, melting up, toward that 4600 level. In addition to that, we also noticed the VIX is starting to come down, and at the end of the session on Wednesday, actually getting close to that 20 level. It closed at 20.77. And it was up at pretty close to that 30 level early in the week. It was high as 28.77 on Monday. And also the put call ratio basically been chopping around this 0.75, except some brief moment that is, kind of got very bullish here on Monday at the open, like 0.56. And also today it got a little bullish on the open as well. Was sitting at 0.56 as well. Then it came back up and sneaked back up just above that 0.75, and it closed at 0.7513. So it is still a little bit of a risk off for the market participant. But the advanced decline on Monday was pretty strong, and like here on Monday, the New York Stock Exchange actually got over 2,000 more advancing issue than declining issue. And even on Tuesday, it was also quite strong, 1,554 more advancing issue than declining issue. But today, it's pretty much negative, and ended the session at, 422 more declining issue than advancing issue, with the S&P 500 close up almost 43 points or 0.94%. And if we look at this daily chart of the S&P 500, see there's 4 consecutive updates, and it's pretty much, just say almost a 60-degree line coming up, right? So it's pretty steep, like a little bit of a V, well, especially, just a little bit of a flat spot here. And one could say it might be a little bit of a double bottom. But again, we're essentially looking for this thing to possibly pull back down and retest this low, or at least get close to it. And you can see that the VIX is sitting inside of this zone here, that's between this 20-30 zone, and the put call ratio is hovering around this 0.75. The market participants are still showing signs of caution. And here we see the up-down volume ratio earlier in the week, basically pretty much on the upside. A lot of buying up here on Monday. It was 4.5 to 1 in favor of the up volume, and also the advanced decline, the daily advanced decline. The advancing issue outnumbered the declining issue by 2,123 on Monday. Now today it turned negative. The up-down volume ratio was actually 1.1 in favor of the down volume, and there were 383 more decliners than advancer. But although the S&P 500 still managed to close with a gain today. So that's give us a little bit of a negative divergence. The last couple of days, we did see some improvement on the new high, new low. You see that the new 52-week low kind of contracted And today there were only 55 stock make new 52-week low. But there were 77 stock make new 52-week high. So the new high, new low turned a little bit positive in the last couple of days. And here we see the cumulative AD line from the New York Stock Exchange is kind of heading down a little bit, with the S&P 500 just do a little bit of a V shape. So that is a strong negative divergence on the downside here. We expect this to come back down a little bit and retrace and catch up with the advanced decline line. And here, looking at the Nasdaq 100 daily chart, we see that got a little bit of a bearish hangman candle today. It was a little bit of a bullish hangman candle yesterday. But again, it also pretty much like the S&P 500, it just came straight up, and 4 consecutive update. We are seeing a little bit of the new high, new low improvement here also. You see these spike down, and right now, today and yesterday, it was down at the 50s. So, quite a contraction on the number of stock hitting new 52-week low. Remember up here, we're talking about somewhere around 1,161 last Friday, and back here at the beginning of last week, it was like 1,764 stock make new 52-week low. And today it was only 115 with 57 stock making new 52-week high. And likewise for the Nasdaq 100, also showing a little bit of a V-shaped bounce here on the on a closing basis, but the AD line, the Nasdaq cumulative AD, is also pushing down. So again, we are seeing a negative divergence here between the Nasdaq 100 and the Nasdaq cumulative AD line. So I wouldn't be surprised that we see some sort of pullback in the coming days, especially with the Facebook disappointed earning. And beware, tomorrow after the close, Amazon is going to be reporting its earning. So we'll see how the market will react to Amazon's result. All right, let's take a look at the S&P 500 daily chart here. Remember the last video, we're basically looking for a price to essentially break out of this zone here on the upside scenario. And if it does, then we're looking for the price to come up to this trend line and possibly come up and test this 38.2, somewhere around this 44.85, and see would it be able to get above this trend line. And as you can see, on Monday, it actually moved right to it. Then on Tuesday, it actually came back down and back test this trend line, also this 38.2. Remember, we're also saying that once it get back into this channel here, the next level of potential resistance to look for is this 45.45, and that's this pivot high. Yesterday, it encountered some resistance here, and then today it gapped up and came back and checked for support. Now, right now, it's bumping up against this trend line, so we're going to see would it be able to break through this trend line and come up to this 618 at 46.13. Now, the other thing is, after our Facebook reported earning, and the streak didn't like the earning, so Facebook is down a whole bunch. So we'll probably see the S&P 500 will get dragged down by the tech sector tomorrow. So we're going to see would it be able to come back down and hold this 45.45 tomorrow. And if it doesn't, we'll probably see it pull back to this trend line here once again and possibly check this 44.85. And if it doesn't hold this trend line, then once again, we're basically looking for the S&P 500 to come back into this zone here and possibly break the lower boundary of this zone and come down and check this low here from the previous Monday low. And also for the Nasdaq 100, we're also looking for the possibility of moving up here and work yourself up to this 15,345 on the upside scenario. As you can see, it finished with a little bit of a hangman candle here, and that could be a little bearish sign there. So with Facebook being down after hour due to the disappointed earning, we could see the Nasdaq 100 get dragged down and possibly work its way back into this area here at this 14,384. Not saying that it's going to drop all the way down there tomorrow, but there's a possibility. But we're looking essentially for this zone to come back into the zone and work itself back down to this low here. And for the Russell 2000, again, we're basically looking for the Russell 2000. If we could get above this pivot and come up toward this 2075, that would be the next potential resistance. You see, today it was trying to work toward that level and backed off today. So right now we see would be able to chop around for a couple of days and make another push into this 2075. But if it dip back below this zone here and come back down to this pivot, then we probably see the Russell 2000 work itself back down to this 1935. Because after a brief encounter of that bear market territory, the following day it closed back up. So it get back into the correction territory instead of a bear market territory. For those that do not know the difference, the bear market, someone defined it that anything 20% or more, from the high, then that would be a bear market, and anywhere between 10% to that 20% level, then we'll consider as a correction. And quickly looking at the Dow Jones Transportation, we're saying that we'd be watching for this 15,346, this support turn resistance level here, to see would it be able to get back above it. And as you can see, yesterday and today, it stayed above that. So right now, we essentially see what us continue to push up and retrace some of these Fibonacci retracement level. So the next one is essentially up at this pivot area, somewhere around 16,114. So if it could get up to that level, then that would be the next level of potential resistance to keep an eye on. Or would it come back down and fill this gap here that was made yesterday, and come back down and check this 15,067 level and possibly work itself back down to this low here, somewhere around 14,500. And for the Dow Jones Industrial, the Dow Jones Industrial, stay above this channel here, this trend line inside this channel, and continue to push higher. And right now it's sitting at this potential resistance here, essentially this pivot high, somewhere around 35,625. If it continue to push up and be able to stay above that, we'd be looking at this area here next. That would be somewhere around 36,500. But if it come back, then we're basically looking at this zone once again and check for this level for potential support, which would be somewhere around 34,731 here, this pivot high here. And finally, for the New York Stock Exchange Composite Index, remember we were talking about that it got back into this zone here, and if it could break out of this zone once again above this 16,700, then we'll essentially be watching this 16,932, essentially this pivot high here, and see would it be able to get back above this pivot high. If it does, then there's a good chance that it also could come back up and test the all-time high. Now, if it come back into the zone, then I'd be watching for this thing to retrace back down to the other side of this balance area, which would be somewhere around 16,094. Now, let's take a quick look at the SPY, the ETF for the SP 500. Remember, we're watching to see would it be able to get above this zone here and then move its way up to this this zone here. And notice that in the previous video, the point of control, this composite profile point of control was down here, and you see today it's shifted up here at the 457. So that is the composite point of control here. Right now it's bumping up against this. So tomorrow, depending on how the market will follow up on the disappointed earning from Facebook, and if it come back down to below that zone, then I'll be looking for this thing to come back and check this level down here and possibly work itself back for the zone. Then I'll be watching this 438, this composite value area low. But if we could chop around here, then we're basically looking to see would it be able to push about this 460 and work itself up toward this composite value area high near 473. So tomorrow I'd be watching for this possibility on the downside somewhere around this 443 area to see would it work itself back down to this area to check this 443. Now, not necessarily saying that it will come down tomorrow to this 443, but working its way down to this level here. And now let's take a look at the QQQ, the ETF for the Nasdaq 100. We're basically looking for this thing to possibly push up here into this 370 level. And as you can see, today it got pretty close to that level there. And right now it's starting to back off due to the Facebook earning. So we might see it to pull back to this area here, somewhere around this 355 zone, right? This small area here, and possibly come back down to this 354, 353 area here, and see would it be able to pull above this this zone. If it dip below this into this zone, dip back into this zone, then I will expect it to possibly retrace back down to this 340 and possibly test this low here. And here for the IWM, the Russell 2000 ETF, we're saying that if we could push back up, then we're essentially looking for this 204.50, essentially this 205 area, to see would it be able to get back into this zone and then possibly push up to this 217.50. And right now you can see today it was trying to get up to that 205 zone, but unable to push into it. And now it's pulling back and sitting at this composite value area low near the 201 area. So we're going to see would it be able to make another attempt to push up into this 205 zone. But if it can't do that and start backing off, then we be looking at this 195 and possibly back down to this low here below this 190, somewhere around this 187, 188 area. Now let's take a look at the 10-year yield. As you can see that it is still bouncing around near this 1.8%. Remember, we are still monitoring this cup and handle, the small one, and also this bigger one here, and we're basically looking at this 2.5%. Now for the US dollar, we see that it failed to move up into this 97.79 area and pull back the last 3 days, and right now it be I wanted to test this area here, this 95.70 area. So if it dip below that, and we be watching for the possibility of coming down to this 94 and test this 94 level, because if it could bounce back up, then we be once again on the lookout for this 97.79 level. And on this weekly chart for the crude oil, we continue to see the crude oil trying to nudge its way up to this $90.43 level. And I would not be surprised to see before the end of the week that we will take out this 90.43. But if it does, decide to turn back down, then we're essentially looking at this 84.94 and possibly get under it and work back toward this 77 area. And for silver appeared to be holding this support here into this 2270 zone here. So we're going to see would it continue, be able to hold this zone and possibly get a bounce back up to this 2470. And if it doesn't and dip below this zone, then we essentially will be keeping an eye out at this 1960 area. Like I said in the previous video, we're basically looking at this trend line. As long as gold is holding above this trend line, we'd be watching for gold to make its way up to this 1923 level eventually. Because right now it's still chopping around this 1804 zone, and that zone been visited many times. So as soon as it break this trend line here, we have this trend line, declining trend line here. So if it break above this 1846, then we'd be watching for a move to this 1923, and I wouldn't be surprised that move might come pretty quickly. Now let's take a look at the ES, the E-mini SP500 future. Here's the drop here from Facebook earnings. You see this ES just came right down, and right now it's sitting somewhere around 45.40 and 3/4. And here's the market profile chart for the ES. Remember, there's a couple of the balance area that we've been watching, and one is up here, and then the other one is somewhere around here. Basically, this balance area, I'm just kind of eyeballing the TPO to mark them off. And essentially, we're saying that once it break out of this balance area, we'll look to see would it get into this balance area. And as you can see today, it got into this balance area and put in a balanced day. Now let's zoom in on this and we take a closer look. And here's the single print zone that left behind yesterday. And also there is a pull high here that I forgot to label that. There's a pull high here at 41.75. And as you can see, price have taken out this pull high and put in a balanced day today. It did leave a pull high and a pull low, which I will update the chart and post on my Twitter stream tonight. Yeah, so there is a pull high here from today and also a pull low. So it's settled here today, and as you can see, like I mentioned earlier, because of the Facebook earning, the ES currently is trading at 45.40 and a quarter. So most likely we probably will see the price come down and fill these single prints here left behind from yesterday. So let me scroll this up here. So we'll probably see these single print, this pull low get taken out and possibly come down and check this 45.05 point of control tomorrow. So that would be the downside scenario. But if it pushes up, then look at this, look for this point of control here somewhere around 45.60, up here that is left behind today. And this point of control has already been tagged today. Then, if it come up, take out this point of control at 45.60, then we'll be looking for it to possibly move up here and take out this pull high at 45.86. So in summary, beginning of this week, we saw a continuation of the upward momentum that started last week and essentially following up to from the strong close on Friday. Right now, it's pushing up to a level that it might start encounter some resistance, and we should not be surprised to see a little bit of a pullback, especially when noticing some divergence. The negative divergence between the AD line and the indexes, and also the VIX is still at the elevated level where the market participants are still showing signs of caution, and also the put-call ratio is still not at the point of risk on. I think there are still a lot of hedges being put on to protect potential downside. So just be careful. I do expect some minor pullback, and depending on how the earning play out, especially with Amazon after tomorrow's close, we already know how Facebook is doing in the after hour today. So we'll see. There probably will be some continuation of selling pressure in the tech sector tomorrow. So be sure to smash that thumbs up to help me promote and share this video. Thank you for watching and stay safe.